it is not the I told you moment here, but you need to understand one thing. If you missed this after hearing before the window was closed, that was your ignorance. Okay, what happened cannot be changed, right? What can you do next to maximize your profit? Instead of just watching others fill their wallets, look for patterns and trends, analyze that, make that opportunity count, understand the market, and buy and hold those dips. Why it's one of the last supportive buy the dip moment here? You will understand as we explain further, because that has a lot of technical value. But one thing is for sure, you will regret not making a buy if you haven't done that before by 0.55 towards 0.6 or below, because your buying area in this supportive zone will not be coming back. Why do we think so? Because there are a lot of technical indicators which does highlight that you are going into that area. If we just consider that we are entering the markup phase here, then at least a 300 to 600% fluctuation is expected in the next wave up. And this is based on the recent price history, not based on the 2017 market cycle, just based on the 2020 market cycle. And this gives you the medium-term targets. Will you achieve it or not is up to you. Welcome to the Scientific Investor channel, where we discuss crypto and science behind investing regularly. If you guys saw that buy the dip moment around 0.55, 0.56, price reaching back towards the support area, that was a golden opportunity as I highlighted. Now, why is the technical coinciding with the fundamental as of now? There's a lot of reasons which I'm going to share with you guys today and explain it. But this one from Galgatron gives you one more idea. As the interest in crypto increases and institutions jump into Bitcoin and Ether, you can see how things are changing. In 2017, this happened. In 2020, it's something similar. So what will they do to avoid these network congestion and delays? That frictionless effect is what they want if they are entering in to buy that moment. But they can't do that using that technology. Whereas in World Economic Forum, this new report from December 2020 gives you a little bit more clarity about what is it good for each and every different crypto assets. Now, when Ian Nothing highlighted this, I saw it, so I'm thankful to him. But there are guys who are, trying to put negative ideas, saying it's just they're highlighting all the different crypto assets. But the question is the use case, and the answer for Ripple is extremely bullish. You have to go through and read, and we will do that here, because at the same time you do have to understand, for the World Economic Forum's cryptocurrency working group, Brad Garlinghouse is a part of it. Now that's not just small stuff, right? It's huge stuff. So when we see Brad Garlinghouse from Ripple and Crypto Kohli from Binance, you have to understand their origin is from same area. So that gives an added advantage, because that's for Binance US. So it gives the added advantage there. And that's why when we go through this document, it's really important. Now, yes, you can argue that they are talking about all different assets, starting from Bitcoin, Ethereum, Ripple, and all layers, say the base layer, then the second layer, and other stuff. What you have to understand here is that Ripple is the base layer, similar to that of Bitcoin, but compared to the second and multi-layers of Bitcoin, Ripple, the base layer itself is advanced. Now, above that base level, you are actually getting other layers of support for XRP ledger, like Inter-Ledger Protocol, in which XRP ledger is the base for settlement, but the interoperability layer is being connected there. Now, using different initiatives from XRP Ledger and the developers who are using that, there's a lot more utilization coming in. Now, when you go through this, they kind of detail you what they talk about: base layer blockchain, second layer blockchain, and other stuffs. But what really is interesting for us is what they actually term for each different assets. Here, they are talking about Bitcoin in a way that it's, kind of, okay, one of the first technology, but not that huge. But when you go through these stuff, Ethereum, they're highlighting it for these smart contracts, and yes, the implementation strategy for that is working. The smart contracts are compiled, read, and executed using the EVM machine. So that is kind of programmatically a good one to look at right now. But other competitors are building even better solutions. But for Ripple, this is the important stuff. You go through for Ethereum, you go through for BTC and other assets, and then come to Ripple and see what really is there. Now you will definitely understand the role Brad Garlinghouse is playing in these forums. That's one of the main reasons, Ripple, the company, is having so much regulatory support, as it's trying to provide that clarity for this new asset class. Now, read through this. XRP was built for payments use case. So the use case is clear, and at the bottom it is highlighting that, making it a convenient instrument in bridging two different currencies quickly and efficiently. Did we reaffirm that here almost every day, that the international use case, the cross-border payments, fiat to fiat, you need a bridge, and the bridge is available. Now the World Economic Forum, along with others like IMF, BIS, is using the term XRP to bridge that one. Now, the use case, you have to understand what are these useful for, right? Crypto, what is it good for? That's the question which is being asked here, right? An overview of cryptocurrency use cases. Now, Ethereum, they're highlighting smart contracts. Okay, cool. But for XRP, it is being highlighted like it's a bridge asset. Now, one of the important stuff here is already it scales towards 1,500 plus transactions with a near zero cost. Wow, you can't even consider that as zero, right? 0.0003, that's kind of zero. That's cool compared to what you just are experiencing here in Bitcoin network or any other shitty network like that. Now, yeah, I know if you're a Bitcoin maxi, that won't be comfortable for you, but that's the truth, and you have to, you can't actually turn it down. Now, when we move on to further looking at what really is happening, everyone is taking a bit progressive steps. But this one, even though it looks like progressive, I personally feel like it's not. US Treasury bulking up crypto policy advisors as wallet registration rumors swell. Okay, so they kind of now pointing towards, if you have a personal wallet, you're doing your own, you're holding your own asset, you are like your own bank, that doesn't actually fit well for the governments, right? Because they can't actually come and take it out from you. It's only you know what's the password, only you know how much you hold. So that kind of makes it difficult for the governments to control you, because their final aim is to control. Not everyone governs, they just try to control and manipulate you. In that aspect, this is like, if they had to do this way before, it was actually kind of something cool if they did way before. But right now, it's too late to do this. Look at China. They are already establishing their network for payment using central bank digital currency, and whereas US is just starting with that journey, if you look at that. Right? So looking at the use cases as we just talked and the regulators stepping in, you really understand the use case of an asset is so much important. In this article, it shows payments giant American Express investing in institutional crypto trading platform. So American Express is well known for what? Payments. So that's why they are being named as payment giant. So here it's also being highlighted that XRP was built for payments use case. It's kind of easy to understand, but it's for some people, for some reasons, they don't actually still get this point. They are running behind a lot of different assets. They are not coming into the right assets, even if they understood this. Because say one day they'll learn it, they'll look at it, they'll say, okay, that's cool. Then the next day, they'll see the market going down a little bit, and then that's all. Each and every knowledge which were put in place inside the brain were erased. Now look at this. Ripple's IPO could come in 12 months. Last time when we heard from Brad, that same thing, it was like 2 years. And now he's highlighting 12 months. So that means one thing for me. He saw a huge recession. It came, it hit the market, and he now looks forward to a recovery of the market within 12 months. So say from 6 to 8 months or 9 months, the market may slowly bottom and start to move to the upside. Still, that's like a 2.5 year long recession hitting the globe. But once the market gain that confidence back and start to move up, not just the vaccine companies moving to the upside, just the entire market getting that push where, now not the entire market, I mean the entire market where you provide use cases, where you provide actual value to your customers, that will move to the upside when investors come back into the market, when they gain that confidence back. So now this one from Michael highlights that area for crypto. See, this is the few years where you kind of can have the 1000x to 13,000x gains. Yes, crypto is dangerous. Yes, crypto is risky, but if you are not ready to take risk, you'll never see these kind of profits in your portfolio, because that's what crypto provides. And here, this one is something pointing back towards what Galgatron is highlighting here, right? And that's really valid because Uphold is an exchange. Short for memory pool, it's the pool of unconfirmed transaction on the Bitcoin network. After a transaction, it's placed here before getting picked up confirmation. Okay, so now you understand the entire shit of mempool here, which is backlogged. And the exchange is highlighting that, and that exchange is already partnered with what we are talking about, right? So these all adds up. Now, Ripple's XRP could be the coin for crypto skeptics. Now, it's not only crypto which we are talking about, it's general digital asset market which we are looking. Because of the use case as we saw here, and the change in the entire market, regulators, governments, being an investor, what should you be looking at? You should be looking at the market cycle to understand where you can make profit. And that should be your final aim, because you're not, yeah, we can say we are here for the technology, but at the end of the day, being an investor here means you are here for either medium or long-term profits. That does matter. You're putting in capital to make money. It's not just you are putting your capital there just to support the network and go away, right? So in that aspect, technical also has a big role to play. I really don't remember how many of you guys were here back when we highlighted that price is making a double bottom, maybe by early March or late March. And then we repeated that after that double bottom, RSI is making a higher low and moving to the upside after June, mid-June, July range. If you bought in there right now, you are in around 200 to 300% profit when we took out the profit around 0.75. Do understand the market gives you that idea way before, and if you take action based on those information which the market gives you, you are going to be profitable. And if you do the opposite, that's completely up to you. Now, look at this right now. This was the symbol which market gave you back then. Okay, that happened. But right now, the market is showing you that it broke above this trend line in a shorter time frame. It went and achieved our first target level. Now it came back. It's retesting this particular area. Now that was the chart when I created it. Now if you go back and look at it on a 4-hour, to see what the market is doing as of now, because I don't want you to be lagged with the information, because I would be editing, uploading the video, and it takes 2.5, 3 hours from now. So if I'm using a chart like this, which I made 1-2 hours back, it would be like 4 hours delay. So I just wanted to update you there. Now, looking at this one bouncing here, this is the shorter time frame chart where you get a bounce here, and that is a support level. Now below that support level, you have the 20 and 50-day moving average, which the price already crossed. So now it is acting as a support. So that means if the price is bouncing from here, in a shorter time frame, it has the trend line support and then the moving average acting as a support. Now jump into the longer perspective. The RSI is still moving within that supportive movement on a daily chart. Remember that double bottom which we highlighted was on a weekly chart, and that's why I gave more value for it. It's on a weekly, and that's going to happen. Just you need a lot of patience. Otherwise, you would be kicked out. If you're seeing that on a weekly and entering on a 4-hour, that doesn't work well. If you see an opportunity on weekly, you should enter based on that. If you see an opportunity in 4-hour, your targets should be based on that, right? So now that support is this one, which is holding about this base channel support, then long-term trend line support, and then the extra long-term horizontal support. So if we are getting that bounce here where the RSI is pointing to the upside and MACD is showing a possibility to cross to the upside in the positive territory of MACD, that's bullish. If you digest it well, it's double bullish. Here, if you look, this first pump here from the bottom was kind of 60 to 70%. Then the next one came like 100%. So that's like 30 to 45% increase in the pump. Now next one, from this to this, it's like 100% increase in the pump. So 100% here, 230% here. So that's double, 1.3, right? Now if you take in the medium range here and plot it just for the 50% rise here, you kind of get from the bottom here towards the top around $2.6. I know it's around $2. So it just goes about $2. Now, if you take the same and consider the maximum here, not the maximum, the average, say the doubling ratio, because as you see, the percentage of increase is always going up in this bull market. So if you look at this and plot the similar perspective here, you reach around the all-time highs. So that is the time when you get a lot more euphoria in the market. A lot of guys would get too much excited so that the price will go up because they will buy, and that will create an additional flow of resistance because whales would come out to take their profits when you are reaching around 500% pump and reaching around 0.34, 0.36 here. Then that is like, there's a lot of profit taking going on. There's a lot of sellers jumping in without looking at the overall long-term market. Because when the long-term market is hitting new highs, if you remember from the time which we put this high here and the higher low here, I highlighted that too. We are making first higher high, second higher high, and one low, then second, the followed one, this one, higher low, then higher low, and here again higher low. Now, if you delete all of these and just put back into that perspective which I told, this is what you see. Now, if you just want to count the trend without looking at the actual touches of the highs and lows, this is what you actually see. This is going exponential and this is widening, right? It's a widening wedge pointing towards the upside. So the next one, it can move way higher, right? And as it broke out of the base channel, the trend change is confirmed. Now, the change in trend, when it's confirmed, is not when you actually buy in the opportunity. But if you actually missed the real opportunity during the accumulation phase, when we were below here, now if you were watching this channel at least 3 to 4 months before, we have highlighted several times that this would be the maximum accumulation zone and we would get a reaccumulation area. Now, the reaccumulation is way above this one. Now, why does that actually matter? I'll take you to Bitcoin chart and Ethereum chart for you to compare it and get an easy picture. Say this is the accumulation range of XRP and here is the reaccumulation stage. Now, if you take the break of this one and the bottom of this one here, it's 40% above, Wow, that's extra bullish, double bullish. If you want to order double cheese burger, it's something like that. Now, you go into Bitcoin chart and then look at here when Bitcoin was starting its rally. If you were in the market, then if you were listening to Scientific Investor, we were discussing things like that, right? But when we started the channel here, it was say late 2019. But we do highlight all of these patterns and what really happened there. Now, if you just delete that and just go into the substance of the matter, you can see this was the trading range of accumulation zone. As you broke above that one, this was your reaccumulation phase. It was around 20% above the accumulation zone. So this is the reaccumulation zone. Then you see what did happen from there for Bitcoin, with its price being so high at that time compared to XRP in value, say $5,000. It went all the way up to $14,000. Now it corrected back with that within that extended bear market and then moved towards 23K. Now go into Ethereum chart and then look at what I'm saying. There is a huge difference in the bullishness which the market is providing you. This one is your accumulation zone for Ethereum, but the reaccumulation zone is coinciding with the accumulation zone. You don't have that much double bullishness there. It's still bullish, but it's not showing you that double bullish indication, whereas XRP is giving you that symbol which Bitcoin did early in its market cycle this time. So Bitcoin did like 20% and XRP is doing 40%. So if you then again go back towards BTC to check how much BTC did in number of percentage, say considering your return on investment from the bottom of the cycle towards the top of that one, just that one, it's 334. Now, if you go back into XRP and okay, before going back to make this easy from there to here right now, we are in BTC around 700%. So first is 330, then 700. So for XRP, it should be double that one, right? Now you go back in and look at, now this is the area where you kind of start to laugh, because when you look at the bottom of XRP and the recent top, you kind of understand that it's already 420% from the bottom there. And then if you are plotting this next one, say 670% from that bottom to the upside, you are going to reach around, say, yep, somewhere near this one. 700% gives you 1.2%. Now look at the, okay, I won't go back to BTC chart. Look at that time frame which BTC consumed to reach that and XRP. And that's why XRP is always kind of the last one to pump in a market cycle, but it pumps hard. Considering all of this which I have stated, you should understand what you own right now. Now that's something of value, right? If you digest it properly, that's really something of substance and value for your time. And if you do feel so, then hit that like and subscribe button if you haven't done that already. And if you would like to get these kind of charts and updates for your portfolio with different assets, let it be XLM, BTC, Ether, or any different crypto assets, you can contact me via Patreon, and that gives you additional value. But do understand, try to join by January 1st, because otherwise you'll have to pay 10 days extra. Say within just using for 10 days, you'll be paying 1 month fee in Patreon, because the charge is for monthly on January 1. Otherwise, come into a basic tier, $5, $10, and then upgrade after January 1st. That would be beneficial for you. So guys, I'll meet you on the next video. Bye for now.